Hi, hello. Hi. I would like to start with some question for you, actually. What do you think these things have in common, actually? A catastrophic event, supply chain, farming industry, drones, 3 seconds, and a code, and a track, codes and algorithm, and lastly, sport and rewards. Well, the solution is, of course, InsureTech. But what is all about InsureTech? So I am Filippo Sanesi, working for Startupbootcamp InsureTech in London, and I'm head of research and partner management for Startupbootcamp. So Startupbootcamp, briefly, is a global innovation program helping startups and insurers to innovate and collaborate together. We have 13 different, we have 19 programs in different cities. We have a presence even here in Istanbul, and we are located in London, so the InsureTech program. So when we look at the definition of InsureTech, actually, InsureTech are those solution, technological enable innovation that are helping the InsureTech and insurance sector to bring new business model, new application, and new processes, generally associated to material effect. It means they want to resolve a problem, a real problem. So when we look at the technology, actually, the major technology now that are being used in by the InsureTech startups are IoT, artificial intelligence, for example, in the claim process, legal tech, for example, artificial intelligence in regulation and compliance, blockchain, as we discussed before, drones, etc. So InsureTech is quite a new term, actually. It's just 3-4 years ago, and no one knew about InsureTech. And if you see actually the graph nowadays, it's a really popular term into the financial services. But why now, actually? So this morning we discussed about the importance of users, and when we check actually who is the main players in the InsureTech ecosystem, there are, of course, startups, investors, industry, like, regulators, accelerators, insurers, and of course users, either B2B, so industry, let's say, and customers. So the main things with user is that nowadays, me and you, we are using new technologies or existing technologies, and we are changing our way how we do consumption. So if, for example, I call an Uber taxi, I'm expecting actually the Uber to be on time, on the same minutes that is displaying. And this is happening the same in insurance. So we are changing our expectations. So we expect something from our insurance. And we want a tailored product, a tailored experience. We want a fair price, and we are no longer loyal because out there there's a lot of competition. When we check actually investors, they spotted this new upcoming wave to the market, and they want to partner with startups, and they want to understand actually how you could reinvent the way how people buy insurance. If we check actually the investment in the past year, they are now reaching nearly 6 billion, and just in 173 deals in 2016. So this is actually show the progression of investment in the InsureTech space. What about actually incumbents, so insurers? Well, insurers understood that nowadays there's a lack of trust between customers and insurers, so they want now to give back power to customers. They want to empower them, designing new products and services tailored for them, and they want to optimize the value chain. It means they want to reduce operational cost. They want to go back to make revenue and help the whole value chain. And when we check actually startups, why startups are so agile? Well, they have light process, of course, compared to corporates where the processes are heavy because the size of the company generally is slightly different. There's a lot of rules, there's a lot of constraint where startups are able to build and destroy the business model quickly, and they are highly dynamic. So when we combine all this technology, actually, and we check for each of these, actually, the use cases for insurance, at Startupbootcamp, we come up with 1,500 good startups that are a good fit for our corporate partners. It means insurers, actually, they want to work with startups that are solving a real problem. It doesn't matter if they are InsureTech startups or not. So, of course, as we discussed this morning, the majority are based in North America, but there's nearly 48% are divided between Asia and Europe, and this is actually an upcoming trend. And when we check actually the hubs, where actually the startups are located, as you can see, US, Europe, and especially India and China are the major players. So where actually startups are operating? Well, mainly into the distribution sector, because it's new channels, new opportunities, but we've seen more and more startups coming on the market that they are targeting the underwriting and the claim process, because through the huge amount of data that we have, the insurers and startup are able to collect. Now they can better price and they can help insurer to position their price better in order to attract new customers. And this is interesting. So most of the startups are operating nowadays into personal lines. But in the past year, we've seen nearly 22% more application to our program into commercial lines. It means that a lot of solutions are coming disrupting the commercial lines, because it's a complicated area where you need to understand regulation, you need to understand the industry where you're operating. Therefore, it's not really an easy area where to operate. So if you go back to my first slide, actually, and you combine a catastrophic event and a supply chain, for example, there's a startup called Adapt Ready, is a US-based, and they're working into the business interruption sector, combining catastrophic events, so predicting catastrophic events and how those catastrophic events would actually affect the supply chain, because if one of my suppliers won't be able to produce something for me, then I have to shut down my, production for days. Therefore, I might be entitled to claim for business interruption. So insurers now, through this new solution, they're able to see not only my business, but the whole supply chain, so they can better price and they can predict risk. And when we check actually farming industry and drones, we work with a startup called Robotics. This is a South African startups, and what they're doing, they are flying drones through crops, and they're analyzing how a crop is healthy actually, or is not healthy. Therefore, they're able to interact with straight away with the farmers, helping them to reduce risk. And this is a clear example where insurers are not only selling a policy, but they're not just present when on the sales point or when a farmer claims, but they are in the middle helping actually farmer in being more profitable. So this is value added for the insurers. And lastly, this is one of the most famous startup in the InsureTech space, but it's really important to highlight the fact that 3 seconds and a quote is Lemonade, so it's one of the most famous startups based in New York. And what they did in December 23rd, a guy called Brian, I guess, so he claimed through Lemonade a bot that is called Jim, that he lost his quote for $979. In 3 seconds, Lemonade, the bot actually, was able to run 18 different anti-fraud algorithms, so 18, then inform Brian that the claim was accepted and pay the money to the bank account just in 3 seconds. So how these things are actually affecting insurance? Well, this, for example, is setting a new target for insurance, because how insurers can compete with 3-second payout claim. So this is an important question that a lot of insurers are actually trying to understand how it works. Or, for example, a track and a code an algorithm. So there's a lot of attention of self-driving car. And yes, it's one of the major areas where insurers are looking to understand how actually, who's going to be liable in case of accident. But there's a lot going on even in this sector, so more as well into the commercial line. So there's a startup called Otto now is being bought by Uber. And in a country like US, where there are around there are 1,200,000 employees working as a truck drivers, and there are around 4,000 fatalities each year. What that means when you have startups like Otto that is deploying autonomous truck on the street, so as well, who's going to be liable for the goods in case of accident? So when we check nowadays where InsureTech and startups are, we did a survey with PwC and a global survey with Startupbootcamp, and we discovered that just 40% of insurers are nowadays collaborating with startups. But if you check, most of them, they recognize that new technologies such as artificial intelligence, etc., are really important to them. But if you check the numbers, so 70% of the enablers, startups, they want to work together because they recognize the role of insurers, so they're not in the market in order to disrupt them, but they want to work together. But 72% of them are worried to work. Why is that? Well, how they can protect their IP, how they can actually make contact with them, this is another question, and also the length of internal corporate process, as someone this morning said, you can kill startups in 6 months' time if you're not working with them, so you need to speed up your process. But the success is possible because 70% of our startups, for example, they're working with corporates. It means, a lot for them. And for example, we have one of our partners in London is Lloyds Banking Group, so it's not a proper insurance, although they have the insurance division. And they're working now with 3 startups in order to build and to bring to the market a home insurance product. So this is quite cool because not only they're working with 1 startup, but with 3 startups combining together. So as you can see, things are happening. There's already some results out there. And when you check actually our partners that are now 18, they are part of, in our case, in our innovation program because they want to learn, they want to experiment, for example, this law around blockchain, as we said, so they want to understand how blockchain is going to impact them. They are now trying to understand how cybersecurity and cyber risk could be better priced. So when we check actually the 4 that, in order to partner with startups, this is our funnel. We work with huge numbers this year in order to just give them 10 startups that they're solving a real problem to them. So it's not just about the cool tech or the cool idea, but it's really how you can solve a problem. And when we check the sector that we work in, this, from pension, claims, internet, chatbot, etc. And there's a lot to be done, especially in commercial lines and health. And this year, for example, we had a lot of attention in sharing economy because how you can actually price all the sharing economy activities. And lastly, I would like to finish, let me use this word. So for me, InsureTech is a revolution happening now. So there's already a lot of cases where corporates and enablers are working together in order to maximize efficiency. So they want to put down costs and collaborate more. They want to improve the trust between customer and insurers offering new products. And also they want to learn how to do things faster, better, and cheaper. So thank you very much. Any question, you can ask me or you can drop me an email. Thank you.